The U.S. Department of Agriculture believes larger cash receipts will help net farm income bounce slightly higher this year. The USDA's latest forecast, released Wednesday, projected 2017 net farm income at $63.2 billion, nearly in line with the agency's previous estimate in August. November's numbers predict receipts from animal sales will increase almost 8%, but those from crops will fall 2%. Kansas State University's Gregg Ibendahl joined us Wednesday afternoon to review the latest estimates. We started by asking if the overall net farm income projection strengthens the idea the industry reached a bottom.
Gee, that's a really good question. I would like to hope it's the bottom. I mean, if you look at it like a 20-year history of net farm income, there's been a couple of years where we kind of touched along these levels here. We haven't really gone down much below that. And if you look at the average, we're certainly well below that. So I'm hoping it's the bottom, although I can't imagine grain prices going any lower, but you never know. The one thing that's been kind of keeping us somewhat in good shape has been the input prices. So, there's a chance they could go up a little bit for next year. But, as far as the revenue side, I really hope we are at the bottom for that.
I'll go further into that. What aspects do you see have improved and are helping?
I mean, as far as the revenue side?
Mm-hmm.
Well, if you look at it by crops, I mean, from the crop side of things, I don't think we've seen much improvement at all, unless you're a cotton producer. And we do have some cotton production here in Kansas now. It's becoming a bigger crop here all the time. But as far as, our big crops, corn, soybeans, grain, sorghum, and wheat, I mean, those prices really haven't improved much at all. So we haven't really seen much revenue increase there at all. Now, on the livestock side, I think this year's probably turned out to be a little more of a surprise than what we thought. Prices have actually remained steady and have kind of gone up the second half of the year. So livestock revenue, doesn't look really too bad. I mean, it's not, well, at least compared to last year anyway. So the revenue side for livestock producers does look pretty good this year.
After ticking upward the last few years, debt-to-asset and debt-to-equity ratios are projected to hold steady this year. Would that hold consistent with what you've seen in Kansas?
Yeah, I think so. If you listen to the USDA report this morning, they were saying that equity was going to be up about 2 or 3%, and they were attributing that to higher land values. I'm not really sure that's the case here in Kansas, because I'm not really sure we've seen the bottom yet for land prices yet. So if our land prices are holding steady, maybe going down a little bit, I think our debt-to-asset ratios are probably maybe increasing a little bit more. The other issue with those ratios that you talked about is that the debt-to-asset ratio especially is a trailing indicator. So I would not expect to see that really rise until we've been in a really bad farm crisis for a couple of years. You go back and look at the 1980s, and the debt-to-asset ratio really didn't start to rise until we were well into the farm crisis.
I think the last time we talked, you said the delinquency rate was another trailing indicator. What are those rates, that rate, the repayment rates, what do those look like?
Yeah, they're starting to bump up just a touch, but historically they look really good. So yeah, from that side of things, we look like we're in really good shape. But again, that won't really start to rise until things get really bad for a couple of years.
So do you think producers have eaten away at some of the profits they gained a few years ago, those larger income years that they had?
Well, what they've been doing was, and some of our evidence with our KFMA program here in Kansas would show that, is that producers tend to take those good years and take those profits, actually invested it back in machinery. So during those years where we had some really good net farm incomes, we saw a lot of farms here in Kansas really crank up the amount of machinery that they have on their farms, which actually tends to be a pretty good farm management strategy as far as machinery management, because now, with farm profitability being low, these producers can tap into that machinery and not have to spend a whole lot of machinery here for the next couple of years.
To what effect has health insurance become a large category of spending on the farm?
Yeah, we're lucky we keep track of that data here at Kansas. So we have data going back pretty far for farms who do decide to give us their individual information like that. So we have information for health insurance. It has basically doubled over the last 20 years. It is now probably our second or third biggest category as far as expense items are concerned.
And do you think that it keeps increasing?
Yeah, especially, if you look at what happened since 2007, it was going up before that, but that rate even went up even quicker since then. It's been pretty steady here, and I don't see any sign that health insurance rate is going to go down any. So that's becoming a major problem for a lot of farms.
As far as the data that the USDA tracks, what costs do you think still need to retreat in order for profitability to return?
Well, again, I think a lot of these things could be solved by having higher grain prices, and like some of my colleagues say, a good drought somewhere in the part of the world will do wonders to help grain prices. So something like that would help. As far as the expense side is concerned, I think 2016 going into 2017, I think we've kind of reached the bottom as far as input prices. You look at what fuel price has been, what fertilizer price has been, those have all been pretty low from you look at a 10-year perspective here. And we're seeing some evidence now that, fuel prices may be going up higher here. So I expect to see some increases, maybe a little bit in fuel and for fertilizer for next year. So I don't think we're going to get much relief on the expense side. Again, it's going to take some changes on the revenue side, especially higher grain prices for these grain guys to see some better profitability.
What have you been advising producers to think about during the off-season for the cropping guys and into the 2018 season for the livestock guys?
Well, I mean, if you go back and compare this farm crisis with the previous one, I think both of them you can break down into really a crisis of cash management here. So I think a lot of producers can survive some periods of low profitability. It's just making sure you have enough cash to get by, because obviously net farm income is not providing all the cash by itself here. So you guys really need to watch out for how much you're spending. Watch that family living. We're still seeing, recreation is one of our top household expense items. So farmers need to watch that, and certainly, on the machinery side, hold off buying machinery as long as they can, because that's where a lot of our cash ends up going in a lot of years.